Good afternoon. It is Saturday, October 28th, 2023. It's almost 5 p.m. on the East Coast, and this is Goldfinger at CEO Technician on Twitter, Rob Sin. A lot to get to, but we're going to be more concise and just cut it down, not as many charts. Going to try to zoom through the heart of the matter. There is a lot of macro, a lot of geopolitical uncertainty. But let's get to it. Start with Israel, Palestine, and this quote from Stan Druckenmiller that really hit me last week. The one thing I've learned about markets over time is that they tend to train you to ignore something and then humiliate you once you figure it doesn't matter. I feel like all of these wars, um, tensions, call them whatever you want to call them, either Russia, Ukraine, or Israel, Palestine, even China, Taiwan, China, US. A lot of these issues have been known about for some time, paid attention to them for certain periods of time, like February, March 2022. The markets definitely paid attention to Russia invading Ukraine, but then here we are, October 2023, and we've kind of become numb to it. With Israel, Palestine, I mean, this situation is as old as time. I mean, obviously, we've had terror attacks, 9/11, 2005 in London. I could go on. Hundreds of terror attacks in the last 20, 30 years, right? Um, but at some point, things change. And sometimes they can change in a very big way very quickly, kind of like we saw with the pandemic. The world seemed to be perfectly normal on January 1st, 2020. Everything seemed to be in order. And then 2 months later, everything had changed. And it kept changing, and it kept changing, and it kept changing. And the pandemic proved to be a major transformation point for many things in the world, not just human health, not just the people that died from it or suffered from it or continue to suffer from it, right? It changed the world in more ways than we can imagine. It changed human psychology, people's work patterns, right? On and on and on. So, I get my news from Twitter. I don't watch television. I shouldn't say that. I turned on BBC a couple times in the last month, but I don't really watch television. I don't read news sites. I get it from Twitter, and I get it from trusted sources. This is one of them. You know, Erdogan, the leader of Turkey, who has, really quite frankly, I mean, some people definitely don't like him. I'm not saying I like him or don't like him. Just, I'm observing him. You know, I'm an American. I fly Turkish Air sometimes. I've observed the country evolve during his tenure as leader. And, Turkey 20 years ago was a backwater, borderline third world country in Eurasia. Yeah, it's a NATO member, but not terribly important in the world. In the last 20 years, Turkey has transformed itself to be a very important player in the world. I would almost, in some ways, call it a leader, maybe a minor, leader. Certainly not as powerful as the U.S., but certainly that power gap between the U.S. and Turkey has narrowed in the last 20 years. I would say it would be as wide as an ocean in 2001, and now Turkey has a significant amount of power that it wields in the world, okay, especially in the Middle East. And you see what Turkey's done in Syria, what it's done in northern Iraq, the Kurdish, issue. And Turkey has even had big influence in Ukraine, playing both sides, meeting with Putin and also supplying the Ukrainians with Bayraktar drones that killed so many Russian soldiers in the first months of the war and blew up so many Russian tanks, right? So Erdogan, as I think his name is properly said, is quite a clever fellow. And he gave quite an incendiary speech this morning about Palestine and Israel. And he basically, in some ways, warned the West that they may be overstepping. And also basically said, in a roundabout way, he threatened to send Turkish forces into Gaza. Now, sure, maybe his politics, he's playing to his base, he's playing to get coverage in the Arab world, gain influence. Surely Turkey's not going to move tanks and troops into Gaza. That would be catastrophic, to say the least. But, words matter at the end of the day. Yeah, politicians say a lot of things, but words matter. And people hear these words and it enrages them sometimes, and it causes action. And so I feel like with what is happening in Gaza right now and what happened in southern, Israel a few weeks ago, this is not business as usual. This is very serious. And, maybe that's obvious to some of you, but maybe not so obvious to others because it's far away. It's a far away place that has no impact over our, little lives here, right? But it absolutely matters, and it could affect our little lives here sooner than we think, right? It's one of these things where, a butterfly flaps its wings in Africa, and then a chain reaction of events takes place, and suddenly massive things happen across an ocean. And this feels like one of those moments in history. And I just, if the IDF, the Israeli Armed Forces, want to be really nasty, they can make this very bloody and very painful and potentially cause a much bigger conflict. I was happy to see this headline in the last hour that humanitarian aid will be coming into Gaza, drastically more aid coming into Gaza over the coming days. I believe that the humanitarian situation there is dire. Obviously, I'm not there and I'm, relying on accounts, but if you think about it, if they've been cut off from the world for 2 weeks with no fuel, no power, no phone service, you could just imagine what your life would be like if you didn't have fuel or electricity or even a cell phone to use, right? And then throw in bombs being dropped on you every day, right? You can only imagine the horror of that. And again, I'm not saying this to take the Palestinian side. Please don't take it that way. This is war, and war is ugly. War is hell, right? And so the Palestinians are going through hell, just like many of the Israelis did experience a couple of weeks ago. War is hell. And so hopefully the world can step back from the brink of hell, because I feel like this conflict is on that brink. It's on the edge. And certainly somebody is powerful as the president of Turkey threatening war with a nuclear power, like Israel, like the US, that's hell. I don't know if Turkey officially has nukes, but they certainly have very powerful, military forces. And any conflict with Turkey against a major power would be catastrophic for the world, right? I don't think that any human being really wants something like that to happen, unless somebody who's suicidal just wants to see their life end. I don't think anybody wants that. But listen to his speech from this morning. It was incendiary. It was inflammatory. And I hope there's better days ahead, right? So, another thing. So here's the speech. Here's him talking Turkish flag. So this is a very patriotic, Palestinian flags waving, right? So he's appealing to the emotions of the populace, emotions of the voters, the Arab street. So a lot of this is probably just politics, just gaining favor and popularity, and saying what he knows will get the most coverage, the most response. But the Israelis don't like this, and they remove their ambassadors from Turkey, and Turkey has sent their diplomats home from Tel Aviv, right? So obviously tensions are very high here. Tensions are very, very high. And it just feels like one of those moments where the thing that we've ignored for so long might be about to bite us. I wrote this. So that's enough of the Israeli talk, Palestinian talk, macro talk. Obviously, some of you probably just fast forwarded through this because you don't want to hear me talk about it. That's fine. But I felt it was important to address the issue. I wrote this blog, almost a month ago, 3.5 weeks ago. A cheery consensus cruises for a 2007, 2008 redux. And one of the points that I made was everybody seemed to be at the beginning of October calling for higher yields, that 4.7%, 4.8%, 5% on the 10 years, not high enough. We're going to, according to Rick Santelli, 13%, according to Peter Schiff, 10%, according to Jamie Dimon, 7%. And it just seemed like one of these consensus trades that was happening again look at how big of a move we've already had in yields. So we've already had a massive seismic move, the most violent move in the yield curve in such a short period of time in history. And yet the crowd was cheering that rates have to go even higher. Right. And usually when I point out something like this as sort of like alert, like, look, everybody is leaning one way, the market's not going to turn straight away. It's probably going to go a little bit more in the direction of the preceding trend. But usually when I see something like this and I call it out in this way, probably within a month or two, that trend is about to turn very hard, right? And I feel like we are on the cusp of that. I'm not long treasuries at this exact moment in time, but I could be very soon. I feel like 5% on the 10 years is a very, very high yield. And with the trends I'm seeing in the stock market and the macro backdrop, I feel like there could very quickly be a flight to safety move into treasuries, including 10 years. Obviously it hasn't happened yet, but I feel like we're right on the cusp of it. And maybe the bigger point of this blog post, not to sort of call it top in yields, but to point out the parallels between 2007 and today. And I believe that those parallels have only grown stronger in the last 3 weeks. Um, and the pain we're seeing in the junior mining sector in 2023 is very eerily similar to 2008, right? So, 2007, 2008, those 2 years are known as the global financial crisis. It extended into 2009, but really 2008 was the year of the global financial crisis where everything fell apart, right? And the junior mining sector was experiencing major pain in June and July and August of 2008. It was just getting worse by the month. And then September happened, Lehman Brothers, right in the middle of September. And what we thought was really ugly and really bad already got so much worse over the next 6 weeks. It was a horror show. Um, so I'm not calling for a 2008 repeat, but I'm pointing out there's a lot of parallels. There's a lot of similarities, and look at what the 10-year did in the end of 2008, right? So the yield on the 10-year was over 4% earlier in 2008, and it dropped down to 2%. So that is a massive move in bonds, just massive. If you're long bonds, you're long the long end of the curve, the 10-year, the 30-year, and you see yields go from 4% to 2% in 2 months, you can make a lifetime trade, basically. You can make the sort of trade where you never have to work again. You never need to make another dollar for the rest of your life. Like that sort of move, if you can get it right, is a career maker. And some people did get that trade right at the end of 2008. And I just see, like, here we are. We're at the resistance yields. Go back to 2006 and 2007. The Fed was at 5.25 on the Fed funds. Here we are today. The Fed's at 5.5. And so I've been calling the Fed to be done since end of August, early September. And Goldman issued a report last week in which they stated the Fed is done. Fed officials appear to have signaled that they will not be hiking in November. Absolutely not. That's Wednesday. They're not going to hike. It's already 100%. And we interpret their recent comments to imply that most members of the FOMC would prefer not to hike again, right? So unless there's some major inflation problem out there and somehow the S&P jumps back to new highs or something, there's not going to be another hike, okay? And especially the fact, and I stated this a couple of times in the last 2 months, that with 2024 being a big election year in the US, the Fed does not want to be political. They don't want to be interpreted in any way as affecting the outcome of the election. So they're most likely going to stand pat. And if there is any big adjustment to monetary policy, they will telegraph it 3 to 4 months in advance. It will not be a surprise. They're not going to want to surprise markets in any way in the next year. And we are exactly, as of this day, we're basically exactly 1 year out from the election. We can start the countdown timer 1 year. So I think the Fed is on hold. I think the Fed is on hold until the second half of next year. And when there's a cut next year, the market will know it 3 months ahead of time. And probably bond traders will know it 5 to 6 months ahead of time. Okay. But before I get to precious metals, I just want to talk about the equity market first. It's one of these situations where, yeah, you could say we're oversold. Definitely, you can say stocks are oversold here. I mean, look at the chart. It's pretty much straight down for the last couple of weeks. But this is not an extreme oversold state that we're in. I would say this is mildly oversold. Definitely the sort of setup where you would expect to see some sort of a bounce Monday or Tuesday. We could even see like a 2 to 3 day rally from here. I mean, that's what you would expect in any kind of a normal, somewhat healthy market environment. You'd expect a bounce here. So if we don't get one, that's some big information. If we don't get one on Monday or Tuesday and we start to just keep heading lower, then it might be time to panic a little bit. Um, I, you know, it was ugly. Last week was ugly. Wednesday, Thursday, Friday were all ugly trading sessions, but I don't sense any panic. Okay, I don't see evidence of any panic yet. VIX is dead. It's been trending up, but 21. I mean, I think we'd have to be at least 25 to even consider some panic. And usually 30 is the real fixed gauge of panic. Um, in March over here, the day the S&P bottom, the VIX hit above 30. It moved above 30. So we're not there yet. This is not even at the levels of panic that we saw in March. Okay, so this is not, it's ugly, but it's the kind of ugly that you don't want to buy. Okay, that's sort of my main message here. And, use the NIMO. This is a good oscillator that can help you to see, extreme overbought, extreme oversold days. In the summer, here we hit extreme oversold. Oh, sorry, we hit extreme overbought in the month of July, early in the month, and that was actually a major sort of topping point for a lot of stocks, for small caps. I mean, look back here. The summer was a major top for equities, and the NIMO got up to about 70 in the middle of July. By mid-August, we moved into oversold territory. Okay. Um, Ever since then, this indicator has been pretty much useless. It's just been oscillating sort of in the neutral area. So there's no extreme signals here yet on anything. All that there is a steady downtrend, a steady grind lower. It's orderly. It's orderly bear market action. And look across different sectors. How many charts look like the IWM chart, where it peaked in the middle of the summer and it's just been a straight downtrend for the last 3 months, right? There's a lot of charts like this. American Airlines, Royal Caribbean, right? There's a lot. Bank of America, Ford, right? So, and look at Ford just falling apart last week, right? So, the four charts I just pulled up: American Airlines, Royal Caribbean Cruise Lines, Ford, Bank of America. This is American business. Like those four companies, that's American business. Those four are giving you a sampling of the health of the economy, the health of the U.S. workers, consumer. It's giving you the real-time pulse. What is the real-time pulse looking like to you? The Fed's not hiking again. Okay, the Fed is not hiking again. And in fact, we're a lot closer to the first cut, right? It's hard for me to predict it exactly because there's some politics, some timing involved. There could be some black swan event that could force them into a cut sooner, right? But there's a cut coming next year. Fed's on hold until next year, probably at least until March, maybe even until May or June, but there's a cut coming next year, right? So before I get into gold, because this segues perfectly into gold, just looking across a lot of different charts out there. I just showed you four, showed you Amazon. Amazon blew away earnings estimates, crushed earnings estimates. And yes, it was up almost 7% on Friday, but it was kind of oversold heading into earnings. They beat everything, and the stock even actually sold off late in the session. Okay, it's not a healthy market. Tesla looks busted and broken. It had this gap lower on earnings, and it's just been sort of consolidating around 210 ever since. This is an ugly chart. Yeah, it's oversold. It's another oversold chart. Caterpillar oversold. But oversold doesn't mean anything in a bear market downtrend, right? And this is just stocks can keep dropping. Stocks can keep dropping. We haven't had that climactic event. I mean, maybe Ford had it on Friday, but Jesus, what an ugly mess this thing is, right? Biggest automaker in the U.S. or second biggest, right? It's obviously a very big company, and it has a very large impact on the U.S. economy and the U.S. consumer. Well, 52-week lows, right? And actually, let's zoom this out. Yeah, look at that. It's a 52-week low. It may not be a multi-year low because it may have been a little lower in the summer of 2022, but it's freaking ugly, right? It's ugly. So we don't need to dissect it too much. It's ugly. And so that's my not so detailed or value added commentary on the US stock market. It's freaking ugly out there. It is oversold. It's one of these situations where if we bounced on Monday and Tuesday, I would not be surprised. And if we crashed on Monday and Tuesday, I would be maybe slightly surprised because a crash is always surprising, but I would not be shocked. It's that ugly right now. Okay. So let's talk about gold's move. Let's get rid of some of these stock charts. Let's talk about gold's move last week. By the way, the weekly closing price, Friday's closing price, has screwed up on a lot of these charts. Somehow 1998.50 got to be the print on a lot of these charts, but actually, if you look 30-minute out, you know what it is? Sorry, brain fart on my part. The official weekly futures close at 1:30 p.m. was 1998.50, but gold trades for another 3 hours, 3.5 hours, and this is what it did after 1:30. Okay, so gold absolutely traded up to 2019, actually 2019.70, late on in the day on Friday, as Israeli troops and tanks were getting ready to move into the Gaza Strip. It ended at 2016.30, right? So it looks different all depending upon if you look at a daily, weekly, or 30-minute or hourly chart. But let's take a look at the hourly. One of the most interesting consolidations happened over the last week between 1970 and 2000 in gold. It seemed like it could not break the range to the downside, regardless of what news came out. There was some data that you think would have ordinarily sunk gold. It did not. And then late in the day on Friday, shorts just wanted to cover, and it drove it above the 2000 levels. So let's look at the daily chart. This is one of the most unusual week or 2 weeks of trading in gold that I can recall. And that breakout at the end of the day on Friday looks quite significant. Okay, it looks very significant. Now, some people will say, well, gold is overbought here. It's going to pull back. It's going to pull back. Well, that's what you would expect. I mean, especially if World War III doesn't happen over the weekend and, aid comes in to Gaza from Egypt on Sunday and Monday, and there's not massive casualties. Yeah, you would probably expect gold to pull back. But something tells me this time is just a bit different. And just like I brought up this Stan Druckenmiller quote at the start, it feels like one of those times where stuff we've ignored for so long actually really matters now. And gold is one of the trades that I guess will benefit, if that's the word for it. Price of gold will rise due to this. And just the fact that the Fed is done now. I mean, in September, people were talking about two more rate hikes, right? So we've had a major pivot in market consensus for what the Fed is going to do. And the carnage out there across the stock market and in consumer sensitive names like transports are telling you that all is not well. I mean, there is data saying that everything is wonderful, but it sure doesn't feel like that for a lot of people. Okay, and I think the Fed realizes that it can do more harm than good by continuing to tighten. And then there's a whole bunch of reasons that I'm not going to get into because the video would just be too long that I believe are going to make the Fed cut sooner than a lot of people think. So this is a bullish environment for gold. Silver is not trading like gold. So that's telling you that a lot of that bid in gold in the last week or so is due to flight to safety trade, and silver is not considered to be quite on the same level as gold as a safety asset, a safe haven asset. Also, the dollar has continued to be strongly bid. This is just a consolidation at the lows in the euro dollar pair. 105.64. This is basically oscillating near 52-week lows in the euro and 52-week highs in the dollar. So gold is strong even as yields are strong and the dollar is strong. This is a major character change between these different asset classes, right? On what was it, Thursday, I wrote this blog post titled "The Makings of the Bottom and an Attractive Chart Set Up in a Silver Gold Producer." Basically, I'm saying that looking out across dozens of minor charts, I'm not going to show you dozens, but I've already done it. There's a lot of encouraging signs, and there are signs of bottoms in place. Okay, we know obviously Friday afternoon we got the breakout from this range, and then I sort of cited a specific minor chart, one that I'm long of, Coeur Mining CDE on the NYSE. And this is just a classic technical setup where you had the bottom put in place August, September, October. You had a breakout move off the bottom. So you had the first leg up. You've had a sort of pullback wave. So you could say A, B, C. The C move will be the next leg higher. And I bought it right on the pullback to support, sort of the sweet spot range there around 245, 250 a share. And then let's go back to look at the most updated chart with including Friday's action. It closed at 255 on Friday. So I wouldn't say it's broken this little flag that it's formed over the last couple of weeks, but it's sort of testing right up there. We'd like to see a move above 260 to really say it's a breakout from the bull flag there. But obviously, it looks encouraging. Everything about this setup looks very attractive. And for fundamental folks, I mean, Core has usually been a 2 or 3 billion market cap, let's say in the last 4 to 5 years. It's down under a billion, and it's also trading under its book value, so 0.9 times book value. and this is one of these key moments for the company. Again, I'm not going to get into the fundamentals, but Core is sort of transitioning from a period of challenging uh, operational challenges, I guess we should say, to expansion and profitability led by its Rochester um, silver mine, okay, that's in the US. And that's ramping up, expanding its production, right? Big silver uh, mine there in the Western US. Um, so moving on, IAMGOLD, IAG. So this has been a top pick for me for the last few months, and a lot of it has to do with their Cote Lake project that's going to be moving into production next year. And you can see the company, I mean, the stock has performed wonderfully in October. And I think a lot of it has to do with the latest update from IAMGOLD, and basically saying that they're over 90% complete on the construction of Cote Lake, and they're on track for production for a first gold pour in Q1 of 2024. So that's obviously good news for the market. There's no more cost overruns, no more headaches from Cote Lake, 92% complete on construction. So hopefully that stays on track. But you could, I mean, the way the stock is performing is telling you everything. Really good, relative strength there. IAG shares up 4% on Friday. One thing that was really interesting last week was Newmont. So the biggest gold producer in the world had this awful trading session on Wednesday. You see the big red down day there on Wednesday. Well, they reported earnings Thursday morning. It seems like some people wanted out ahead of the earnings. Maybe they caught wind that the earnings, results weren't going to be great. Well, they weren't great. They pretty much missed across the board. They missed expectations across the board. A lot of it has to do with Penasquito being on strike. Their big mine in Mexico, silver, gold mine in Mexico. But that's been resolved, right? So the strike ended earlier this month, and they gave an update that they expect to reach full operating capacity by the end of the fourth quarter. So this was sort of a kitchen sink quarter for Newmont, you could call it. But there's been a few of those kitchen sink quarters here in the last couple of years. Not great performance from this big gold mining company that is the only gold miner on the S&P 500. You can see all-in sustaining costs up to 1426. They talked about improvement, yeah, because it was a little lower than the quarter before, but 1426 all-in cost is not great for Newmont, and that was even excluding Penasquito because it was on strike, so they didn't include it in the quarterly numbers. But 1426 all in cost. I mean, and they're saying that's an improvement. So this is really showing you the new cost structure for gold miners. But I also say, well, if 1426 is the all in cost and we're at 2016 right now, it's still almost a $600 per ounce margin at the current gold price. Well, anyway, my opinion doesn't matter. The market's opinion is what matters, and the market bought the news. So it was up on Thursday on huge volume, and then had a big 4% up day on Friday. Obviously, the gold price move had something to do with that move on Friday in Newmont, but still 4% is a very impressive move for such a large company. So the fact that the market bought bad news from the biggest gold producer, this is another character change, a bullish character change for the gold sector. So I talked about the character change in gold itself. As the dollar stays bid and treasury yields stay high, gold is moving up. Well, we have a bullish character change now in the gold miners, as evidenced by Newmont rallying on a bad report. GDXJ chart, another change of character, another character change. Head and shoulders bottom has formed here in the GDXJ, the juniors, which also has, there's a lot of silver in this ETF. Okay. All the big silver miners like CDE, gold and silver, but it's kind of silver heavy. It's formed a bit of a head and shoulders bottom. It's not perfect, not textbook by any definition, but it's good enough to point out the pattern. And then again, showing you this change of character where generally there has been a negative correlation, between the share price of the GDXJ and treasury yields. So when treasury yields rise, gold and silver producers' share prices fall. Well, look at what's happened here. Suddenly there's a big change in this correlation. And it's a positive correlation, positive 0.51. So gold and silver miner share prices can rise as treasury yields are rising. That's what this change in correlation is telling us. Now, that being said, there's big resistance just overhead here around $35.50 to $36 a share. So watch out for that. But if we break through my little purple and blue lines here, that would be very, very promising. And I made a tweet about this. The GDXJ is down about 3.5% right now in 2023. So there is a chance for the gold miners to go into the green here in the fourth quarter. Gold is up about 10% year to date, but the miners are still in the red. Let's see if the miners play catch up to the gold price in the final 2 months of 2023. So we've talked about Coeur, we've talked about the GDXJ. Well, we're left with one topic, guys. Final topic of the video. By the way, if you'd like to receive my morning emails, I write a daily morning market email. It's usually not too lengthy. It's usually just like one page, as well as other updates from me. Please send me an email to contact@goldfinger.capital and just include your name, please your real name, and maybe say hello, and your email where you'd like to receive them at, and I will put you on my list. Okay. Hercules Silver, final topic. Should I talk about the actual project fundamentals first or the technicals? Let's talk technicals first. So technicals are, since October 10th, by the way, I got this data from a good friend of mine on CEO.ca. He has the handle @oops. Very good due diligence from this gentleman. Very nice fellow. Usually trying to help out other investors. He sent me this data. BIG.V has been responsible for over 5% of the TSXV value of all trades, so dollar trading volume, since October 10th. So more than 5% of the entire exchange, and just 3.62% of the raw volume in the exchange. And again, this is hundreds of stocks. So Hercules Silver is doing a lot of trading volume. And not included in those totals are the almost 50% of big volume, which occurred on the alt exchanges, the ATS, right? A total of more than 100 million shares has traded worth over 60 million Canadian dollars across all exchanges just since October 10th, the day that Hercules put out the results for hole 23-05. So that's just really incredible, the amount of trading volume this stock has had. And it just shows you the power of discovery, new discoveries, get the juices flowing, get investors more interested and excited, and more money is flowing. Generally, when these are real discoveries, That's good for everybody. It's good for all investors in the sector. So we are cheering for Hercules Silver. We want to see people make money. We want to see companies win and generate value for all stakeholders. That's what junior mining uh, is all about. The mining sector is all about. So this is the weekly chart of Hercules Silver. Look at the volume. And this, so stockcharts.com is just the TSXV volume. It's not all the Canadian volume. So the stockcharts.com is always going to understate the volume. And actually, it was interesting. I was talking to Oops and I said, well, I wonder if we're going to get over 100 million shares total for the month of October. He said, we're already over 100 million because I didn't have those other ATS trading volumes in my calculation. But you can see the volume is accelerating in the last 3 weeks. This is a very good sign. Yes, the RSI is very high. The RSI is very high. Well, and a lot of people say, well, that means it's a sell. That means it's a short. Well, I just want to state something. Most of the time, when the weekly RSI gets to 88 or 90, you can expect a correction very soon. Most of the time. But some of the time, maybe 1 out of 10 or 1 out of 15 times, you'll see this go above 90, maybe even to 95 or 96. And while it's doing that, the stock could double again. Okay. So this is real talk for me. I'm not trying to pump big. I'm just talking facts. And when stuff gets crazy, some people might call it, well, this is a crazy move. It can get really crazy. Okay. And in the final days of a very powerful move, a stock can double or maybe even more than double. Okay. So I just want to put that out there. I know a lot of people say, well, the RSI is too high. It's got to drop. Well, look at different time frames. The hourly time frame, look, the RSI is only 61. So you're going to have relative strength on the monthly. You're going to have relative strength on the weekly, the daily, the hourly. The hourly, let me show you the pros and cons of this. Okay, the pros are it's a very strong trend. It's obviously still in a very clear trend higher, an uptrend above the 50 period moving average on the hourly. The RSI is above the median line. It's continued to stay above it. It's pulled back twice to right around that 50 level. And both times that was where it found support. That was the buying opportunity, right? Volume is still pretty brisk. Okay. Maybe it's cooled off a little bit from where it reached on the 25th, but that was obviously an extremely high volume day. So the bullish aspect is just it's an uptrend and it's still an uptrend and it's still showing evidence of accumulation. Okay, so that's the bullish side of it. Maybe I wouldn't call it bearish, but maybe maybe it's time to get a little less positive on it. Is that that day on the 25th had a very strong selling volume. And sometimes with these big mover stocks, you'll have a first shot across the bow. Like imagine two ships hundreds of years ago having a cannon battle at sea. You sort of had that first volley that goes over the ship. It doesn't hit it. And then the other ones actually hit it broadside. And that's what sinks it. Well, maybe the first sort of, reversal day is that first shot across the bow. But you know what? Sometimes you get the first shot and you don't get a second shot. It just keeps going up and it's going to top at a much higher share price. You could have said that back here on the 16th, where it had maybe you could have said that day was the first shot across the bow. Well, look at what it did. It went from 45 cents to $1 over the next, week and a half, right? So now if we saw another day like last Wednesday, then that would be a little troubling. Okay. That would be like maybe, okay, the stock is going to cool off a little bit now. We're going to pull back a bit, right? But one day, and I made this point in the CEO.ca channel, one day does not make a trend. So you had this candlestick here, and then we kept going up. You had this candlestick here. Well, Thursday and Friday, it kept going up, right? So one candlestick does not make a trend. But obviously, we got to look at that $1 level. That's obviously resistance for big. And I sort of threw out some levels last week publicly. Resistance was 85 cents, so we closed above that on Friday. So the next level is $1. Above $1, there's no resistance, there's no price history, right? Support. So now I would say that 80 cents is support, 65 cents would be the level underneath that one. Okay. So there's the technicals. And let's just talk about the discovery a little bit. Okay. I'm not going to spend a whole lot of time on this because most of you probably know as much as I do about it, quite frankly. But this slide 18 from the Hercules Silver presentation is great because it shows you sort of all the characteristics of a major copper porphyry feeder system are here. You've got a lot of smoke, these copper gold, soil, anomalies, very high grade soil anomalies, 3175 ppm copper, 663 parts per billion gold in soils. And you got this really thick, high grade skarn at surface, creating up to 21% copper, right? A kilo silver, 4.5 grams gold, right? So there is a lot of smoke that something sits underneath the surface here that could be a real monster. And that's what led the Hercules Silver team to find this deeper stuff and drill hole 2305 and beyond to the discovery that they're on to now, the blind copper porphyry discovery that was intersected in hole 2305, and this juicy system of high grade copper and moly, 45 meters at almost 2% copper. So this is highly enriched zone there, this sort of layer where you have multiple pulses of fluids bringing the minerals into it here. 45 meters thick, that's pretty good. We'd love to see 100 meters at 2%, obviously. But let's see what's to come, okay? Just moving on to the slides here, you can see the drilling. And what's really interesting to me is obviously you can see they moved south from hole 2305. They moved south and east. And then look, the final hole, which I believe 2326 is the final hole of the program. I'm not sure if they're done drilling this yet. It says, according to this presentation, the color coding, it's in progress. So until they tell us it's completed, I'm going to assume this is going. And just looking by the length of it, this is going to be the deepest hole of this program by far. So it's really interesting to me that they went back to the west, and this is the deepest hole. This is going to be way deeper than 2305. I mean, I'm just interpreting based upon what the length of the drill lines are here. But this is going to be over 1,000-meter hole. So that's really interesting to me that they're going so deep. They went back to the west. Why did they do that? What are they drilling into? I'm very curious, as I'm sure many of you are. Yeah, you can go through all of the slides like I've done many times, but I want to point out one more thing. Where is it? Where is it? Where is it? This is it, highlighted in blue here. That's why I scrolled past it and I missed it the first time. A lot. So they haven't drilled very much, and the potassic center of the porphyry system has not been found yet. And often the highest grades are in the potassic center, and it remains to be found. So they drilled 185 meters of almost 1% copper, or 45 meters of almost 2% copper with some nice moly credits. They drilled this on the edges of the porphyry system. This is not even close to where you would expect the highest grades to be. And that's why this is so exciting. And that's why when I look at why is hole 26 going so deep, it's just very intriguing, right? Very intriguing. So we got a lot of information, a lot of data to come from Hercules Silver, and all the same talking points that I had in the video last week. It's still all valid for this week. We're going to see expectations of investors, of speculators swing wildly. Some really pie in the sky sort of stuff. I know somebody was talking about $1 billion market cap last week. And then on down days, people are going to get depressed and, oh, maybe the news isn't good. Maybe they drilled a duster, right? Just stay calm. Just stay calm and manage your position according to your risk tolerance and your time frame, and most importantly, your due diligence and your analysis. Okay. So thanks a lot for tuning into these videos every week. I hope you found some value in this week's video. I know I cover a lot of different topics, and some of it may not be for everybody, but this is me and this is how I do it. So if you found value in this video, please hit the like button and subscribe to my YouTube channel so you can get more content just like this one. And I hope you have a wonderful weekend and a powerful trading week.